Risk disclaimer, we know there's risk in trading. Please always use trade capital only. You know the deal there. Let's get into the 1-minute chart. This is the S&P, the SPY. We're at 420.76. Just going to take a look at some real-time news and see if anything pops in here with the press conference. We're probably starting in just a minute or so. What I did see as far as the big real-time news and all the high alert stuff is that everything stayed as is. It was unanimous with the policy committee to keep rates unchanged. The markets are anticipating a rate cut coming in June of next year. So if I go to the CME watch tool, this is May of next year. Still expected to be the same thing with the pause at 5.5 or 5.25, 5.5. That's where we're at right now after today's rate decision. And then June would be our highest probability right now is June of 2024, our first 25 basis points cut. Obviously, a big shift in the Fed would be if we decide to cut earlier, or if the market anticipates the Fed would be willing to cut earlier, or the flip side of that would be if the Fed is going to be higher for longer. I talked about this. I was just in a bonus session with A1 Trading and Nick Syack. We talked about the Fed stuff and the timeline. Why would the Fed cut earlier? I mean, realistically, debt service, election year, price stability, and not crushing assets, right? Higher for longer is going to really, really slow down the economy. That being said, I mean, it's not really the Fed's MO to lift the economy. It's price stability. Now, we've seen the Fed step in a lot of ways over the last 20 years, but I don't think the Fed wants full, contagion, full just market calamity on their watch, and they don't want it to be with a, election year coming. It's like I don't know. I mean, maybe we have very, very little excitement going into 2024. I'm not sure, but again, week to week, we just continue to trade. So, like I said, nothing's really changed. That's why today seems like a kind of a non-event. We're trading at 421 and change right now. I'll look to see if real-time news is coming in with Powell. Given how far we've come amid uncertainty, we're moving carefully. We'll make decisions of totality of data and the balance of risk. The economy's expanded well above expectations. This is some of the economic stuff that I was looking at earlier, right after the rate decision. We have traders of short-term U.S. interest rate futures see a chance of further rate hikes this year, less than 20%. So very slim chances that December is going to be a rate hike. You can see that right here, actually, if you go into December 2023. Highest probability, again, 80%. We just remain paused and higher for longer. Same situation as we're in right now. Today, November 1st, I mean, usually it's the 15th of the month. I mean, it's usually the third Wednesday of every month for FOMC. That has certainly changed the last couple of years for, quote, transparency. But here we are, looking for a pause through the rest of the year. Now, let's just talk price action, okay? There's a gap up here towards, we hit the highs just earlier today around 422. I do have some levels on my options platform that get us up into like 423, possibly 424 today. If we have a big move to the upside, 425 is in the cards, which is why I have the chart alarm set right there. Currency strength wise, my currency strength reader this morning is a little bit off. As soon as I turned on my charts this morning, I was like, oh boy, looks like we had a flash crash on the Swiss. That didn't happen. So I'm not sure where this price feed came from, but I checked 4 different brokers this morning. None of them showed a flash crash on the Swiss. So what we're staring at today in real time, since 2:30 p.m. Eastern time, Aussie on top, yen a little bit stronger, New Zealand on top, Swiss and dollar at baseline, CAD, pound, euro. So strongest right now is Aussie, weakest is euro at this time. Volatility wise, not super big on the vertical axis. We've got about 40 on the upside, 40 on the downside. So not a ton. Okay, which means you're looking at somewhere around 70 to 80 pips on the euro Aussie if you're short today. And we'll see if there's an expanded move one way or the other, or if things start to rebalance and then come back to baseline, which tends to happen. We either have these, volatility expansions intraday in Forex, or we have these corrections and kind of zero some days. But that's typically what we see. All right. So let me log in live and just say hi to everybody, and we'll kick things off with some just monitoring. Okay, 421.36. The way that I'm positioned for the week, I've talked about this on Monday. We did this in Equities on Demand for my trading room. The green boxes, if you join me on Friday morning for non-farm payroll, I am going to run a live session Friday morning for non-farm as a bonus, and then I'm going to be managing trades by like 2:30 p.m. or 3:30 p.m. Friday afternoon. And if I have price in this green box on the top, that potentially pays 10 to 1. If I price in the middle box, that potentially pays 6 to 1, and the bottom one pays 10 to 1. So pretty good reward to risk on the week. I also have a trade that we're watching for the next couple of days. I mean, honestly, if today gets to 425, traders with me in a long strangle, we're probably going to take some profit. We have a 420 by 407, and if we hit 425, there should be enough time left in that trade to possibly get us up to like $6 credit, and that would give us like $2 and I think 80 cents a profit, something like that. So I would be happy with that if we hit $6 credit. Okay, it'd actually be like 270, something like that. So anyway, this is what I'll be managing. You know, I knew it's going to be a noisy week, combining two major U.S. events like FOMC and non-farm. Bigger picture-wise, for me, just take a look here.
Introducing.
All right, let's see here. Gary, what's happening? Forex business, the GOAT. Nice, thanks. Paul, Jacob, Perry, Catherine, good afternoon. Welcome. So we got a little FOMC bonus session. Thanks for tuning in. All right. So the outlook for me is this. The weekly candle really matters, okay? As it stands right now, this does look a little bit like a piercing line. That is a candlestick formation, candlestick pattern. We have a bearish decision and a bullish decision. It's not engulfing because typically engulfing has to take out 3 candles. We don't have that on the weekly chart. But because we have a pretty decisive bear move and then a bullish move, I think that puts in a pretty solid low. If the market's going to rip back higher, then we're talking about this at 435 to 440. And, you know, as we get through 2 major news events, the U.S. data front's pretty quiet, maybe some CPI data to rattle things a little bit or improve. If I go to my Trueflation measure, and I want to see what the trend is showing us. Okay, that is inflation rate aggregated. Okay, I just want to see just full inflation rate. 2.4. So we've stalled. We're not. I mean, this measure is never what you're going to see in the market calendars, right? The economic calendars is going to be. I don't even know if we have data next week on CPI. Does anybody know when the CPI comes out? It might be next week. Let's see. Usually it's on a Tuesday or Wednesday. I don't see it Tuesday. I don't see it Wednesday. Maybe it's the following week. Okay, let's check the following week. Go out to the week before Thanksgiving. There we go. So November 14th, Tuesday, core CPI, monthly and yearly for the U.S. There's no forecast. That was my point. Is like the forecast we've seen for the year. 3.6, 3.6 came in 3.7, 3.7 the last 2 months. So we were just off the forecast. Obviously, to see an improvement in inflation, we're going to have to see a reading that's less. You know, I don't really look at the month to month necessarily. I mean, obviously, it matters if it's a big surprise, but for the most part, I'm looking to see the major number here is year over year. Okay. So if we print, 3.5, 3.4, I mean, we had that not too long ago, right? We printed 3, we printed 3.2. We have yet to print a sub 3, right? A sub 3 we haven't printed yet. I don't know if that's going to be the case because inflation has been sticky, oil prices have been higher, housing prices have maintained, affordability is down, and it just seems like a big pause, right? Like consumers are still paying higher dollars for things, businesses are passing that dollar to the consumer, and it's just a bit of a slowdown. We also have shelter prices, everything that's core, right? That's minus food, minus energy, minus shelter. Um, that's not really a true reflection of actual CPI. So I really just follow the metric of where is this trend going? We had that big drop from 9%, 9.1% all the way to 3%, and everyone was celebrating. That's what gave us a lot of this rip through the year, right? AI got us started, kicked things off, improvements in data got things started again, and we had like this big run from January to April, big breakout in May. May ran to June, July with momentum until we topped out late July. So inflation readings have been higher because shelter's been higher. Core inflation things, well, I should say the non-core. So you're talking food, energy, shelter. Those have been much stickier and higher prices. So what I'm looking at for this measure is there a trend here, right? We had this low, we have this recent high, and I don't see any type of breakout pattern. So if it starts to go back up, inflation's a problem. This starts to go back down, okay, we're on the right track. So this is a good way to read it with a lot more data points than just the typical CPI. Okay. All right. So Live price trading at 420, still super noisy on the day. Came up to retest the high at 421. I'll look and see if Powell has any comments coming out right now. Anything else? We're not confident policy is sufficiently restrictive, so that's going to be hawkish. And it's just the tone, right? It's like he's going to say stuff. I mean, this is the press conference. I don't know when Q&A officially starts. Maybe it's 3 p.m. This could be a calculated statement that he's reading. As always, there's a long ways to go to get to 2%, so they're not budging. They're still going to keep that 2% target. We are committed to achieving a sufficiently restrictive stance. Higher for longer. Okay, we're attentive to recent data showing resilience in economic data and demand for labor. These could put further progress on inflation at risk. It could warrant further interest rate hikes. So he's literally going to say both things. He's going to say, if we need to, we can raise, but this is what's happening, blah, blah, blah. Basically, it's this. He's always going to leave it open right now. This is called moral suasion. Okay? He's always going to leave it open for, we're not going to give the market the certainty that it wants. We're not going to give the market the reason to rip, right? Now, obviously, the market can ignore all this, but if he just continues to beat down the hawkish comments, then yeah, we might drop for the day. We might end up at 416 or 415 for the day, and that's okay as well. That's what we're positioned for this week in the trading rooms, you know. So overall, the day, I mean, we gapped higher towards 418 and change. We got up to this early gap and kind of touched that first pocket at 421, almost 422. We just retested and failed. So for me, I mean, I'm just looking at this. Are we going to go higher? Are we going to go lower? The day's already had a bit of a run, but I'm looking to see, is there more volatility ahead? And maybe it's not today during the trading hours. Maybe it's tomorrow with a big gap lower, big gap higher. I don't know. This is why I like to trade for the week and not force trades for the day. Okay. All right. If anybody is joining me for the first time, I will post this in the chat right now. Here's my Discord group if you'd like to join it. Free chat. I'll post this in the YouTube comments right now. Discord channel. There you go. Most of you that are watching probably are in it, which is great. I've had some great one-on-one sessions the last couple of weeks. I appreciate those that have, had the courage to step up and not be afraid to share what you've been doing and trading and struggling with and looking for help. And I certainly hope that everything I can provide helps in that matter. So that's all my Discord stuff. I've got all the education that I teach and courses I have, robot strategies, trading rooms, private instruction. That's just straight up one-on-one with me. And then the free group chat, take advantage of it. I'm looking for a community that just likes to talk, wants to communicate. I'm not looking for trolls. I'm not looking for perma bulls, perma bears. I'm not looking for people to just over post and dominate my chats, right? I want it to be, it's for everybody, right? So I'm not looking for crazy trade ideas. I try to keep it pretty general. Not in a bad way, but just I trade the markets. It's like I'm not going to make some ridiculous forecast unless I can back it up. So I think that I go to the higher time frames here. I mean, I said this when I was in the session just a little bit ago with A1 Trading. I mean, I think the way that this daily candle or this weekly candle finishes, this is the SPY weekly right now, the way that this candle finishes, if we finish where we are right now, I would be looking at possibly a piercing line and some follow through to the upside. If we have additional holiday indecision, it could be something like that, right? And if we do have, and think about this, if we have kind of inside candle trading like this, if we have inside candle trading and next week is indecisive and the week of that indecisive, it's really simple. If and when we get a breakout, that is direction that we should follow, in my opinion. Right? I mean, the bears right now might still have the upper hand because this topping pattern is a head and shoulders. We broke, retested, and went lower. So just from a wave cycle, if this is wave 1, 2, 3, 4, 5, that wave cycle from a correction standpoint could be 1, 2, 3, right back to the same highs. That is why today's low and this week's low is really important, that we don't break too much lower than 410, 409. I said that 410 and 400 on the SPY are really key levels. Really key levels. The bulls need to defend those areas. If they do not, then there is a lot of downside potential to eradicate and erode a lot of gains we've had this year. And the way the year has been going, it wouldn't surprise me because this was the from a market breadth perspective, meaning like how many good stocks, how well were stocks doing overall? Terrible, right? The broader market was up thanks to large mega cap tech and huge companies with billions of dollars of profits. It was on the hype of AI. Technology had a nice little boom, but that has since changed, and a lot of this has been, like I said, eroded, right? I mean, I think right now we're clinging to, if I go to my yearly pivot here, I got to zoom in, my chart gets a little bit messier. But roughly year to date, if we start out, let me go to the weekly chart here. This is trading for this. Okay, so the low of the year. So we go low of the year and current price. The SPY is clinging to about an 11% gain on the year. 11%. It was up at one point 20. I want to say 20 some percent, and the Nasdaq was up like 38%. It was up 21.5%, and it's since given back about half of that. So if there's something left for the bulls this year, we're going to see what it's capable of, right? That's what we have to look for. Is the market going to end the year on a holiday rally? It's very possible. It can ignore a lot of the noise. Nothing's happening from the Fed. Higher for longer. Powell's message is consistent. Pausing until maybe June of next year. In the event there's a surprise and the Fed maybe cuts rates earlier, that pivots the market in possibly a better way. If there is a little bit of discussion of quantitative, I don't know. Again, I'm not going to speak for the Fed, right? We listen to this crap every month, and they're either going to keep pausing, keep that jawboning and moral suasion, which is going to be really hawkish, and there's nothing that Powell says that's going to be good, right? And at some point, like, the market is so like exhausted by like everything he says is bad that at some point it just becomes contrarian. Like at one point maybe a CPI news event or maybe Powell puts a bottom in the market that we start to get a big rally from. Sure. So we'll find out. Okay. So anyway, like I said, we've given up about half the gains for the year. Same thing is true on the Qs because the last couple weeks the Qs have sold off much more aggressively than the Nasdaq. So here's my yearly pivot. I think this one, like I said, was up around 38% year to date, starting from this low. Yeah, because this is essentially a double bottom. So we start from this low, which is way down here, went up around 47% at the lowest point, and has since given some of that back, where now it's still around 34%. So the Nasdaq is still postured pretty darn well. We didn't have a Black Friday crash. We didn't have all the stuff that people were. I mean, when it's friggin' trending on Twitter, it's probably not going to happen. I'm sorry. It's fine to be prepared for it. I mean, that's the beautiful thing about trading is you can be prepared for anything. If the market floor comes out and all hell breaks loose, then you can make money. But anyway, I just think that it's just so funny to see like the extremes in sentiment and the extremes in positioning, the extremes in ideas. I mean, literally, I get so many emails from Seeking Alpha that if I just read the headlines alone, it's completely opposite stances, right? One is it's this double oversold trigger that only happens once every blah blah blah, and then the other one's like, why I'm bearish on the SPY, and you can see that article come out in the same day. So it's like again, it's your opinion. Take this stuff, take this information, and form an opinion, and more importantly, know how to trade. Know how to trade this stuff. So have we done anything here on the SPY today? No, it's 2:48. Q&A is probably starting pretty soon. I don't really imagine much is changing right now. We are not thinking about rate cuts right now at all. Again, maybe the market's like, at all? Oh my gosh, that's terrible. The next question will be how long to keep policy restrictive? Rate cuts haven't come up. So again, jawboning, moral suasion, hawkish tone, very consistent for Powell for a long time now. We look at the labor market, economic growth, and financial conditions. If we reach a judgment, we'll need to tighten, we will. Okay, so again, pretty much par for the course on what he's saying. We're not confident policy is sufficiently restrictive. The rate decisions have remained paused out for longer. June of next year is possibly the first rate cut. We'll see. Again, I'm not speaking for the Fed. We're just going to trade. So for today's price action, let me go into my options platform. We had a spike right down to 419.24. Just a little noise on the day. It's pretty restrictive off that 422 high. We hit like 421.90 today. So we're just kind of chop sueying around here for the last 20 minutes of trading since the press conference, even going into the 2 p.m. rate decision. Not a lot's happened. We're seeing price in about a $2 range. So anything, and this is what's tricky about the FOMC, is for the day, there might be no direction, right? I mean, it's almost 3 o'clock, so we have 1 hour left to trade. And from 3 to 4 p.m., if it just stays here, okay, fine. My question is tomorrow going to be some positioning during the futures market? We have a big gap up or big gap down? I really don't know. Okay. But again, that's why from Monday to Friday, I just want to see price go somewhere, you know? So it just makes my life a little bit easier just to manage as it comes to me. Okay. All right. Anything else you're looking at? Again, currency strength chart update. We have Aussie dipping back a little bit, Kiwi dipping a little bit, dollar and Swiss still remaining baseline, CAD, pound, euro still the same. Even for a big event like FOMC, the markets seem pretty darn quiet today, which is kind of expected. I mean, in a way, it's like nothing's changing. I still think the market is trying to grip the low at 410 and the possible holiday rally. I am curious though. I'll just post this out there. If we hold this low at 410 and the holiday rally is sufficient, I do think that the market can come back and retest highs by the end of the year. Why do I use 8 cap? I don't use 8 cap. I'm a US trader, so I don't trade with 8 cap. If I was a non-US trader, I would trade with 8 cap, but I'd be trading institutional, so I better spreads, or I'd be working with Forest Park FX to get cashback rebates on those spreads. So, I mean, 8 cap's a great broker. I do a ton with them. The trading battles have been a blast. Their staff's awesome. But anyway, all brokers. I mean, they're all. Look, it's a necessary evil, right? If you're looking to save money in forex and improve your bottom line, I would say contact the team at forestparkfx.com. I talked to Justin just a couple weeks ago. Forestparkfx.com. There are cash rebates on trading volume. So if you're trading, micro lots or mini lots or standard lots based on what type of transactional volume you turn during the month, I've had checks as high as, $1,000 given back to me for a month. I've had checks as low as 30, 40 bucks. But it's like, it's better than nothing. It's better than the broker keeping it. There's also, lower spreads because you're a preferred trader essentially. Possibly lower commissions on those round turns if you're doing a raw spread. And then in certain instances, with your balance being high enough, there are VPS, I should say broker sponsor VPSs, where you could get a VPS that could run 3 to 4 instances of MetaTrader 4. If you have like a $5,000 or $10,000 balance, a lot of these brokers will give you that. Obviously, you can upgrade the VPS and pay a little bit for it, but there's at least a benchmark where I've done it. I ran like up to 4 instances on my. I had FX Colo, which is my VPS that I've had for a long time. Okay, so like I said, if you do email Forest Park, just let them know that you chatted with me or got the information from me. I appreciate that, just because I have a friendship with Justin, and I talked to him quite a bit. I'm in the process of getting registered as a CTA over the next couple of months and having my Series 3 and 34. So when all that happens, he's a big part of that. He and I actually had that conversation 8 years ago, and I've just operated as an exempt CTA for a long time. So I'm looking to scale that, looking to grow. Working with a hedge fund here in advisory, retirement advisory, or I guess it's an RIA. It's a retirement investment advisor. So anyway, all the fancy stuff, right? Point is, for bottom line trading, if you are, full-time trading or you're looking to get better treatment from brokers, this is a great way to do it. So, I mean, Forest Park is at least working with all the major brokers out there. The one thing that scares me a ton for all these traders, I talk to a lot of traders. I've done a lot of one-on-one sessions, a lot of traders that are all in these prop trading firms, right? Where it's third party funded. You have your evaluation period. You have tiers that you can rank up, and you got to keep your drawdown below 5 or 10%. You can make money and get paid and tier up and all that stuff. All that's great and fine, okay? But the point is, if you're encouraged to like use higher leverage, that's not a good thing, right? And I just think that it's all about risk control. It's all about process. It's all about survivability. And anyway, I just traders need to acknowledge the risk. And what I don't like is, a broker that Forest Park represents for introducing brokers. They're all going to be brokers with deep, deep pockets. Money is safe. I have more money in brokers that I trade than I do in banks anywhere. I mean, the FDIC covers you up to 250K. Okay, so I mean, I've got millions of dollars lined up in different broker accounts that are insured up to like 1.5 to 1.9 million dollars. So your broker has a better insurance game as far as your funds than a bank. So just throw it out there. It's like, yeah, I mean, you want to work with brokers that are not going to disappear overnight, and that's why I'm saying, the team at Forest Park will get you in the right broker with how you want to trade, what the best treatment is, and then what you're looking to accomplish. So good stuff. Lifestyle said Discord to invite Arch. Let me try it again. I just had a bunch of people join in, so I know it's valid. I've got Trader X, I've got Marshall, I got Raul that came in, Pete came in, so the link works. Let me try this. Click on this one. Okay, this is Discord right here. Try to click on that one. If you click on that one, it should bring you in. I don't know why it does that. It's so annoying. I literally post a freaking Discord link all the time, and there it is. So I'm guessing, Gabriel, you're the person that just said that? Cool. So yeah, welcome. I'll post in the Discord now. Welcome new followers. Okie dokie. Anything on price? 420.74. Done. Got it. And I gotcha. Thank you. Okay, here's what I'm going to look at for the remainder of the day. I'm just going to set a couple of chart alarms. We don't have to sit here and watch paint dry for the next, hour and 4 minutes. But I do want to see if price breaks out above or below and if there's some follow through with it. So ideally for me today on the SPY, if I was going to close out my 420 long call, I want to see price at 425. Other than that, I'm just going to sit tight. Okay. So I'm going to set a chart alarm up here, 422 and change. We haven't broken that high yet, so I'll set a chart alarm at 422. And I'll set a chart alarm down here with that spike lower on 419. And if price gives us any follow through, I would be looking for a couple of things. Price breaking lower, pushing, pullback, and pushing. Breaking higher, pushing, pullback, and pushing. Something like that. And obviously that's probably way too much price movement. I mean, we're not going to 410 today, I don't think. We're not going to 430 today. But I'm just saying, if we break out of this level, just the box, I'm looking for something like this. Can we head down a couple of dollars? Can we head up a couple of dollars and measure this, right? Measure this move here, project the move here. That's a pretty easy way to measure where can we get right now. If we have a breakout between now and 4 p.m. before closing bell, we might have a $2 to $2.50 breakout, because that's roughly been what we've been stuck in for the day. Once we establish the high, pulled back here, you're looking at about $2.90. So I could see, $2.50 to $3 breakout higher, lower intraday. We'll see what the market wants to go. And again, looking at 5-minute charts, we just spiked all the way back down. Okay, and then spiked all the way back up. Right? So we're at 421.41. It just seems to be really noisy. So let's see if we get a breakout. All right. Any questions? Any charts? Currency strength? Nothing. Like I said, nothing's really changed. So Aussie remains on top. New Zealand's getting higher. Dollar's dropping. One chart I want to take a look at, and I said this for the last couple of weeks. One chart that's going to be really important to watch over the next couple of weeks is going to be confirmation on the dollar index. Dollar index today pushed up near the highs. We're starting to see some indecision on the wick high. If for the remainder of this week we do not break this alarm, then we head back down to the lows. I'm pretty adamant about, if we're going to get a market rally for the end of the year, the dollar doesn't necessarily have to go down, but it would make sense if it does. If the dollar breaks below 105.50, this is DXY. If it breaks below that, that gives a lot of room for the markets to run for Q4, possibly Q1, and we can have a pretty solid, maybe 2 to 3 to 4 months of trading where it's just direction. We can finally get a direction that we can trade. This not only helps our, stock money, any options around those assets, but also trading currencies. I am not interested in trading the dollar yen. I'm not interested in trading really any yen at this point, outside of short-term buying, because the BOJ is just still, mission is negative interest rates, and it's just going to be a mess until they intervene. But other currencies against the dollar, Aussie dollar, Euro dollar, pound dollar, New Zealand dollar, I am looking to go long on those. The one currency pair that's not been super cooperative rather, is the dollar CAD. So dollar CAD, again, some indecision on the day. If I go down to a smaller time frame like this, can the dollar CAD start breaking some of the structure? Something very simple like that. So we're at 38.82. I've got a 39 and 4,000 chart alarm. I'm looking to see if we start to see some confirmation on the right-hand side of the trend line. I do like the dollar CAD to short. Okay, back to this level, back to this level, back to this level. Big pocket back in here around 135 or 134. All we have to do is turn the corner, try to spot a topping pattern, and then I think we've got room all the way back down here towards 34. So confirmation is going to be key, and there's a lot of room for profit, so I don't have to be super accurate with guessing at the highs. Okay, Lewis, I see your question on Bitcoin. Yep. Yeah, so did you get that? Platson asked that question on the yen. What I was talking about with the yen, I know we didn't really spend a lot of time on it with Nick. I got a chart alarm. I'm guessing it's a SPY. So we just breached the highs at 422. So we're pushing up a little bit more on 422. Let me check my strangle on the day right here. It's now at $4. So we got in this trade for $3.32. It's trading at $4 right now. We're back to the highs of the day. If we can close above these highs, maybe a rip towards 423, 424. I told traders today that this gets to 532 or better. I'm probably going to close it out for profit. So I'll be watching this for the next little bit before closing bell. If this starts trading another, dollar higher or so, then I'll probably look to close it out. That'll give me 200. It'd give me a $2 credit per contract. So and I'm willing to protect that early and not have to sit on this for the rest of the week. To Platson's question about the yen, yeah, let me talk about the yen. I'll just type this out really quickly, and it's this. Okay, yen is all about the Bank of Japan. Period. It's all right now. We're in a positive carry environment is favorable, and the BOJ is a negative 0.1% interest. Okay, so there's no incentive to hold. There's no incentive to hold Japanese yen right now, right? So if we go into a lower volatility environment, there's no intervention of the Bank of Japan. There's no change in policy. They're going to let their 10-year yield float. Right now, it's like, I mean, and we've seen this over the last month. We saw, I think, 2 to 3 kind of wick intervention candles on the dollar yen, right? Along with other yen crosses. And, the wicks were down, but what happened? They were immediately bought and rallied again. And it just goes right along with the same idea. Every big position right now is yen short. And I think the reason why is the retail crowd is yen long. Right? Like everyone's trying to short dollar yen, everyone's trying to short the yen, like everyone wants to be strong yen, and that's the sentiment from the retail crowd. The institutional side is very contrarian to the retail side. Okay? So that being said, look, we don't know that the dollar yen has to stop at 152. For all we know, the dollar yen could freaking run to 175, 180, where we have like 1970 levels. I'm talking like 50 plus years ago, right? I mean, the yen was over 200 at one point a long time ago. So it is not in our best interest to call tops and position trade yen crosses, trade what you see, and right now it's like every dip is being bought. Every dip. Okay. What moves first, the dollar, the stock market's like saying what come. Yeah, I mean, again, it doesn't really matter. I'm just saying this is what I'm watching. The main instruments I'm watching, Platson, to answer your question on the yen. So I was telling traders in my trading room, I'm basically looking, if you're going to trade the yen, I'm looking for short-term opportunities to buy dips. Follow your trend. You can scalp all day long if you want to on the yen crosses. I would just stay a bullish bias. Because on the bigger time frames, eventually if the yen does end up like, here's an example, okay, this recent rally. If the yen comes ripping back down here, takes out this low, then we have a potential sell trade back to BOJ intervention lows. But until price cooperates in that regard, I think all it's going to do is it pulls back here, finds a higher low, and then goes higher. Pulls back here, maybe, higher low. And we just map it out. But it's in an environment right now where positive carry is being rewarded and high volatility is not. And in order for this to be higher volatility, that's where the yen's going to sell off. Because it would be how quickly can we position this thing so we can make money without having to pay an arm and a leg for overnight fees, right? And pay that negative swap. All right, real quick, I'm going to check on the strangle here, 425. So we're just shy of $1 credit overall. I want to try to get a little bit more out of that if I can. So I think if we have the push up and we have a gap higher tomorrow, maybe that 425 area would be good for us to take some profit. We'll think about that tomorrow. If this is trading at $5 and change tomorrow with a gap higher, I might take my $1.70 profit. I'd like $2 or better. I set my limit credit at $6 in case we have a big gap up. We'll find out. So anyway, but we did have a little short-term breakout to the upside right here. If this has any follow through, like I said, just in that small measurement, we're looking at about $2.50 to maybe $2.90 of a breakout. Okay, we'll see. But I'm just looking at chart alarms and following where price closes before the end of the day. All right. I'm a happier trader, just not looking at the yen pairs. Jacob, man after my own heart. I've literally said that for years, that I make more money not trading the yen. Period. It's true. I've made more money without focusing on the yen, stressing about the yen. I don't care what they do. I don't care about the Bank of Japan. It's a great currency when you trade what you see and you follow the alignments and you get these big trends. It's freaking awesome, but it's also an absolute nightmare because technically it never cooperates. When you're talking about highs and lows, you're talking about, I mean, like the big contrarian plays that institutions take against retail traders, people get absolutely smoked on yen crosses, and I just hate it. And also the timing of it is like, I'm the days of me trading from 9 p.m. or 10 p.m. my time and trading until 1 or 2 in the morning. No thanks. I'm just not. I'm more of a position trader and builder, and there's 21 other currency pairs for me to trade. So who cares? The yen just drives me crazy. So if I can keep traders out of trouble, good. But if you're looking and you're just like gotta trade something, I mean, you can buy dips on the yen and just follow the trend, but it's bullish until like there's major price overhauls to the downside. Okay. All right. All good. Yep. Okay. Sounds good. So I'll follow this breakout, see if we can fill this gap around 423.50. Traders, if you're in my Delta Trader group or you're in my Equities on Demand group, I would be watching this right here. If this gets up to 532 or better, I'm looking to close it. I posted this in my Delta Trader right here. We paid 332, inserting a $6 credit today. If it gets to 532 where I can take a full $2 of profit, I'm going to do that. That would put me, just put here, if it was $2 a profit, I talked about this earlier today. If it was $2 a profit, two profit and $1.51, we'd be up 351 for the week. If I have one of these three trades pay me, even if it's, let's just say I get a 5x return on one of these. Okay, so this one is $1.50, this one's $1.50. I'll just say on one of these I can get a dollar. We'll say $1.50 net. So I mean, $1.50 profit, meaning we'd get about like $2 worth of credit on this trade. Let me do that math. So if I added in another $1.50 for the week, I'd be up 501 a contract, and I can lose all of these, and I don't think that I will necessarily, but I can lose all of them. So minus 60 cents and minus 38 cents and minus $1.76. I'll still be up 227 a contract for the week. And how did I position? Very directionally neutral, up, down, or sideways. Okay. I'm looking for shorts on the dollar. I'm just looking at the technicals, man. That's all. This is why I'm even contemplating shorting the dollar right here. If this pattern is correct, if this is a broadening pattern, then this is why I'm looking to short the dollar. We had this high, we had this high, we had this indecision here. I get it. Like we have this posture, the dollar's indecisive, but if we go up here and hit overbought conditions, I think the dollar comes back down. Broadening patterns are great for traders, not for chasers, right? Because what happens? The market makes a high, breaks a high, and then comes back down. And what happens down here? All of a sudden you got sellers. All of a sudden you got people trying to force this trade to the downside. I'm telling you, man, the dumbest traders, they buy high and they sell low. So I'm not convinced on selling the dollar unless we break below 105.50, which is right here. So I could see us going up a little bit higher. The first thing I'm going to check is as we go higher, I'm looking for the following. If we go higher in the DXY, I would like to see, are we overbought? Okay. And here's a good example. If we go higher and we're showing divergence on the momentum, we're showing divergence and hidden bullish divergence on, or bearish divergence rather, on the relative strength, I would kind of like to look for confirmation to fade that dollar. And it might be not in my best interest to do it early, but look for confirmation. And maybe if it's a Q4 dollar rally, we look for a Q1 correction. Right? I mean, one thing I've talked about is a lot of seasonality in forex trading. If we have a trend and the dollar's getting stronger for November, December, don't fight it. Okay? But when you come into the first part of the year, we could start to position for, Q1 could be a drop in the dollar, or Q2 when we kick off in April, we could have a drop in the dollar. I mean, again, I don't know, but I'm not overly bearish without confirmation. I just think it's something that I'm interested in watching. Because if the equities market's going to rally, the correlation typically is if we have risk appetite, the dollar's weaker. So in order for the stock market to really gain a lot for the next 60 days or so to finish out the year, I do think the dollar has to go down, possibly break and go lower. If equities rally, that gives Bitcoin a chance to run, that gives, maybe oil, gold, silver, a broader, risk appetite, would be very easy to see the dollar drop and have those correlations play out. Okay. All right. Really quickly here, I'm just checking this. I'm seeing new highs. We're at 422.80, creeping up to that 423 level. We're getting up there. I think what I'll do, let's see, where's the rip on the day? So we closed at 418, we're up to 422. So we're up about $4.60 on the day. That's about the average, if I'm not mistaken. If I take this down to there it is. So my daily is 557 on the day. So we're about in that same ballpark. 418 to 423 and change. We could get up to 550 on the day. That'll be close. And again, I'm just going to watch this. If this keeps going up, $5 plus, 530 plus, probably take my profit and get out of there. That way I don't have to worry about the time decay over Thursday, Friday, plus non-farm payroll as well. Okay, yeah, I'll take a look at Chris David's videos. That's fine. Let me know. Okay, Platson, you good with that? Okay. All right, everybody. I'll wrap it up here. We've been live for just over, about 40 minutes or so. A little bit of a breakout's good. We still have 50 minutes for a closing bell. I'm just monitoring, setting some chart alarms, keep an eye on things, and I'm gonna wrap it up there. If you have any questions, let me know. Appreciate being here for the bonus session. I have another session on Friday if you want to join me for non-farm payroll. That is going to be over here. Here's my bonus session. So we're done with this one now, and then we're going to have this one on Friday. So I'm going to start it at 8:30 a.m. Eastern time on Friday. We'll see what the news gives us. Again, what I look for, I don't really do a lot of trading during non-farm payroll with currencies because it's really noisy. But what I look for is, does the future market get excited? What happens with gaps and pre-open levels? And then we get into opening bell. I look to see if there's some decent traction on the day. Big news like today, big news like Friday, it's an excuse for the markets to move. Okay. All right. That's it for me. I will see you on Friday. I'll see you. So anybody in my trading rooms, I don't have a session tomorrow. I don't have any trading room sessions on Friday. I've got a sister coming into town, flying into Utah tonight. So I'm gonna pick her up. We're gonna hang out. We've got a rage room scheduled. Got some stand-up comedy. Got an escape room. Got some hikes. So, but I will be around. Obviously managing my trades and stuff. Correct. Yep. No flex tomorrow and no equities on demand tomorrow. I will post in Telegram, Gary. I'll post it. I'll either do a video update or I'll post a message update just on something to follow. But I'm going to be out and about tomorrow out of the office and then back at managing stuff on Friday. But no classes Thursday, Friday for me. Okay. Thanks a lot. All right, buddy. Thanks. I'll see you on Friday for the bonus session. I will run the bonus session early on because that's 6:30 my time. So that's no problem. And then I'll see you then. All right. Thanks. Bye.